Good evening, Doc Severson here with a Theo Night report for Tuesday, May 29th. Big day in the markets today as we had some issues with the Eurozone and that contagion spread over to the U.S. markets today. And it brought it down to a very, very important level that we've been talking about for some time now, which is S&P 2682. So you can see this level right there. Now the price came down and undercut that level intraday. You'll also notice that there is confluence at the 50-day moving average, which is this red line here. So we've had the price retest the 50-day moving average as well as this very important pivot. So this is like the epitome of the old rule of former resistance becomes new support, and former support becomes new resistance, which becomes new support up till today. So again, we're seeing this whole concept right around one price level. Price stays below that for an extended period of time, breaks out above it, stays above that for an extended period of time. Where we are right now, as long as the price stays above that level, then this pushes the bullish outcome to this. Again, look at the amount of energy that we have here on the shorter term charts. That's a huge amount of energy. We're going to get some big movement any day now. And this is why I keep saying that this week is so pivotal to markets, is that if this does create support, and oftentimes we can see more of a slingshot type of move off of here as the bears get trapped getting too negative, too late in the pattern. But I will say that if the price does close below 2682 on the ES, then more than likely we're going to, at the very least, retest the 200-day moving average. If not, come back down here to the mid-2500s and retest the February lows. So today was kind of the opening salvo. We will see over the course of the next 2 to 3 days how this is going to resolve. I would say by the end of this week, we're going to know our answer. And what happens from this week sets the tone for the entire summer, if not the second half of this year. Now, I mentioned the fact that we had confluence down at that level. So not only the 2682 level from a horizontal price level perspective, but also that 50-day moving average, which is currently sitting at 2672, 73 or so. But also to layer on top of that, as I move over to the spiders, we have the expected move for the week. Oftentimes this can be support or resistance depending on which side of the price that it's on. So based on everything that I'm seeing, this may be a tough nut to crack the first time through here as support. So every reason in the world for the price to bounce at that level. Now, here is the key. If the price bounces up and prints a lower high and then rolls over, say goodnight. This market doesn't have a shot. If this prints a lower high and rolls over, then we're easily going to see retests of earlier lows that we've had throughout this corrective pattern. Now, the S&P was not the only chart moving today. We had a lot of other big-time movement from things like the 10-year note. The 10-year note, which has been the third rail of the equity market lately, has had a couple of soft days, but today got absolutely destroyed, coming down 5.66%. So now the 10-year note yield is sitting at about 2.7%, where just a few days ago was sitting at 3.1%. Now, because of this, what we had happen, so you may say, well, lower rates, isn't that better for the market? Well, yeah, to some extent, except for this sector here, which is financials. Markets are not going to go anywhere without the financials going along for the ride. And today was down 3.3% alone on the financials. Now, this is still a bullish overall pattern. This is just from a larger time frame perspective, a consolidation pattern. We have more of a weekly flag, sort of a pennant pattern here. And this is not a downtrend yet on the daily chart. Just a swing to the downside, but we have lost the 200-day moving average. So we've seen that loss before, and the price has rebounded from here. So overall, larger time frame perspective, the XLF or the financial sector is still supporting an uptrend. However, it's very tenuous. If the price does lose 26.5, then once again, that's going to put massive pressure on this chart as well. Now, with all the uncertainty, what we saw was a massive flight to stability today. You can see here the bonds caught a huge bid, up 2.19% today. And also with all the instability over in the Eurozone, of course, the dollar caught a bid as well too. So that put huge pressure on all those currency pairs. So when you add up everything today, there was an enormous amount of change in the markets today. And sometimes with all the intermarket relationships, it causes a huge amount of instability as well as uncertainty, which hits the tape. When in doubt, palms out, sell first, ask questions later. So let's go back to the S&P 500 again and wrap this up. Again, it all comes down to this one level here. Really comes down to that one level. As long as the price supports above here, remember what we've talked about is from a sideways and volatile consolidation, which we've been in since the first week of February, this will eventually resolve in one of two ways. The highest probability is that this resolves to the upside, like so many other times that we've seen sideways and volatile resolve to the upside again. Okay, so that's the higher probability. However, we have seen this pattern resolve to the downside. That occurred about 10 years ago was the last time that we saw this resolve to the downside. So this certainly could happen. And a lot of it comes down to how the price handles 2682 on the full S&Ps. So if we see a bounce from here and a bounce to a higher high, then we're more than likely heading into that type of summer tape, the quiet and trending summer tape. If, on the other hand, we either see a bounce to a lower high and a rollover, or just outright we just destroy this level to the downside, it's undercut, pierced, and we don't even hold the 200, then more than likely we are pursuing potentially a move towards trending and volatile behavior, and that is code word for the bear market. That's it for today's report, folks. Thanks for listening, and we'll see you tomorrow.